it looks like a very good set of numbers so far. We have Abneesh Roy with us. Abneesh, the numbers that we are getting from Asian Paints right now, they look like they're better than what most of the street was anticipating. 3 to 5% growth was what the volume growth that most on the street were working with. The companies reported 8%. The sales have grown by 20%, and we've seen margins expand as well as against expectations. What exactly are your thoughts right now? And going from here, what do you think Asian Paints should do?
Yeah, we are quite positive on Asian Paint. It is a strong buy and Braveheart. So it's a line-by-line beat based on first cut what we have seen numbers. So clearly we were also expecting volume growth of 2% versus that 8%. Please remember in Jan month there was COVID wave 3 impact also. And because in November, December such sharp price hike happened, there was a preponement of demand also. So 8% volume growth on a base of 48%, I think these are very good numbers. And what we understand in Q1, again further 1.5 to 2% price hike is again going to happen, and definitely that's from June. So this again shows very high pricing power for Asian Paint, and clearly Asian Paint is gaining market share. So this 8% volume growth, this clearly shows that Asian Paint is gaining market share from the 30% unorganized and the smaller players also. So very good set of numbers.
Well, Abneesh, very good set of numbers, but the stock is down, what, 17%, 18% from its all-time high. Not particularly cheap. It's trading at around 68, 69 times one-year forward earnings. So the first quarter as well, even if the company goes ahead and takes some price hike, the fear is that at some point it will start hurting demand, right? Because this year itself, the price hikes have been anywhere to the tune of 20 to 23 odd percent. Going forward, do you think this momentum can sustain? And more importantly, the kind of growth that we anticipate, is that priced in already in the stock?
No, so not at all. Three things. One, of course, in terms of paint cost, if you see, only 40% is actual painting cost. Rest 60% is the manpower cost. So anyway, customer paints his house once in 5 years. So he normally goes for the decor and the waterproofing and the latest innovation. Second bit, of course, is if you see the companies which gain market share, they will always command a premium in terms of multiples. And as you rightly said, the stock is still 17% lower than its peak level. But if you also see, the market also has corrected significantly. Now with crude also correcting from $130 to more like a 100 to 105 number, I would expect this also to be a positive. So I do expect the stock to do well in FY23, because once we have more clarity on the commodities, I think in the second half, there is a possibility that Asian Paint could see good margin expansion also if commodities correct. But irrespective of that, the pricing power is really good. So I would expect the stock to do well from a medium long-term perspective.
Abneesh, your thoughts on any other stocks from the paint space that you like? We haven't yet heard from Berger. We haven't yet heard from Kansai Nerolac. They're likely to report their numbers today itself. But, on the back of Asian Paints numbers, usually we do see all the other companies' stock prices. In fact, if the director can pull up a chart of Berger Paints as well as Kansai Nerolac, we'll see a reaction on that, whether there has been a bit of a rub-off on these stocks as well. Say something like a Berger Paints should come up for you on the screen right now, and Kansai Nerolac too reports its numbers. Berger more so than Kansai Nerolac, because Berger has a higher share of decorative coming in as against the other one. So Berger's up by about 1.5%, and overnight we've seen a decline in crude prices as well. So from this space, would you still choose to go with the leader, or maybe look at these ones, or something like an Indigo Paints as well, which has almost halved from the top?
Yes, so three key things. Under the new MD, Amit Single, Asian Paint clearly is far more aggressive. So gaining market share, that is something which can impact the smaller players, especially number 3, number 4 players. Second, of course, is Asian Paint is far more diversified. Recently also, if you see, they did make M&A in the non-paint. That is something which really helps them get more from the customer wallet. But we also like Berger Paint. So that's also one more company which is really doing well. Rest of the companies, number 3, number 4 player, we don't cover. But definitely they also do have their own issues, either from an auto paint or more of industrial. So those would also get that kind of a adverse impact versus Asian and Berger, which have got much higher salience of business coming from deco, where pricing power is far higher.
Final quick question before I let you go, Abneesh. The gross margins this time around are 38.6%. This, of course, is a compression year on year. Same time last year, the gross margins were 43.2%. That's understandable. But quarter on quarter, there's been a near 200 basis points improvement. Most on the street were working with a 300 to 350 basis points improvement. Do you wonder that gross margin compression going ahead will be a little difficult, or rather gross margin expansion going ahead will be a little difficult?
Yes, in the near term, you are absolutely right. In Q1, we will see the peak of the pressure on not just paint companies, even for FMCG. In Q1, the challenge is going to be the real challenge of crude ranging between 100 to 130. So yes, that is there. But the paint companies, the investors don't buy for just a quarter perspective. What is more important is what are you doing in terms of price hikes? What are you doing in terms of market share? So definitely we do see that whenever high inflation happens in any consumption, the number one player gains market share. So this 8% volume growth on 48% base, industry wouldn't have seen this kind of a growth definitely. So I would say that Q1, yes, there is a concern, but that's well known in the market. And now we have seen further price hike of 1.5-2% by Asian Paints. And as you rightly said, crude oil also has corrected from $130 to more like $105. But more correction would be needed, or more price hike might be needed. But one more important thing, Mangalam, is titanium dioxide and most of the monomers, they have their own supply demand. So just don't see crude oil. That's only 40% of the raw material. So we need to see the other 60% also.
All right, Abneesh, thanks a lot for joining in. So that, ladies and gentlemen, is the news for the moment right now. Asian Paints reporting a number, and it's a comprehensive beat as far as the volumes are concerned. 8% versus expectations of 3 to 5%.